Okay, so today's webinar is going to be going over the Accord 125. This Accord form is the form that is sent in with all Accord applications and all commercial line submissions. Now, one thing that I want to clarify is through Access Plus, we don't accept the BOP 160 form. And the reason why is because even though you'd think that, it says BOP, all BOP should be covered, unfortunately it doesn't have enough information on there. What happens is we always end up getting more questions that we have to ask, and then it just takes a lot longer to go back and forth with the agent to get all the questions asked. So what we do is we actually always complete the Accord 125. In fact, I've even created a little email that I'm willing to send to anyone who's interested in it. Just send me an email if you'd like to get it. But what I did was I put together an Accord form guide here where it just basically says on a commercial application you always fill out the 125, and then you just add the line of business that you also want included on the quote. So based on which type of coverages you need, you would just add those Accord forms. And then in the email I also include some examples and some highlighted versions that have the sections highlighted that you need to complete in order to get a quote. So if anyone's interested in that, just let me know and I can send you over this email. But as I mentioned before, the 125, you always fill that out. It's kind of like the general information for all commercial lines quotes. So this is obviously a good webinar to be on. So I'm going to close that out and we'll go ahead and get started. I'm just going to kind of fly through the easy stuff here. Let's see, I think today's the 9th. When you're submitting through Access Plus, you can leave the agency part blank. Obviously, if you're sending them to your own direct carriers, though, you'd fill this out with your agency information. This stuff you can all leave blank. We're going to quote this risk, obviously, and then basically this part here, you just check the boxes of the sections that you have that you're going to attach to the email. So for example, if you have, let's say, business auto and commercial general liability and property coverage, you would just check those boxes. For some reason, unless they've added it, yeah, they still don't have work comp on here, which I think is weird, so you would just add that in here. Unless I'm missing it, but you can just add those. Okay, then if there's anything that you're going to attach, you would just check those boxes here. Okay, in this case, I'm not really going to go into all that. Let's just say that we also have, for example, a driver information schedule. Okay, but that's pretty much it. If you have a picture, you can obviously check this box in pictures. Okay, all right. I'm going to scroll down. That top part's pretty easy. Down here's where we get a little bit more questions usually. Obviously, we want to have the effective date. I'm going to say 3/1/2012 because, as always, I always have at least 3 weeks to quote because I am just that perfect of a producer. We all know that this can sometimes be the next day. That will happen, but obviously the more cushion you can give, the more quotes you'll be able to get back, and obviously your closing ratio will probably be better too. But that's as conditions permit. Billing plan, we're always going to select direct, and that just means that the bill goes directly to the insured. It doesn't go to our office or your office first before it goes to the insured. And for payment plan, I usually always put monthly just to see if it's an option. A lot of times I don't know how they want to pay when I'm first getting a quote. I just put in monthly to see if it's an option. You can skip method of payment, but for audit, I'm always going to put down A for annual. Okay? A side note on this too is I'm a producer just like the rest of you, and I only want to fill out the information I need to get a quote. So I'm going to leave some stuff blank, like deposit and blah blah blah, all this stuff, if I don't need it to get a quote, and if it doesn't affect the rating. So just so you know, any of my little webinar thingies here, I'm only going to be putting in the information that's absolutely needed or that affects rate. Okay? For applicant information, let's just say that we're going to do a quote, and let's just say it's Joe's Bar. Whoops. And an important thing to note is if it's incorporated or an LLC or something of that nature, the named insured is actually the entity, which would be the corporation or the LLC or whatever, okay? If it's a sole proprietor, or an individual as they call it on this application, meaning it's Joe Smith is the actual name of the person who owns it and it's not incorporated, then in that case, what you're going to do is you're going to put the named insured, which is Joe Smith, doing business as Joe's Bar. Okay, so just something to note there. If it is Joe Smith doing business as Joe's Bar, if it's an individual, that's the way that would look. But if it's a corporation or an LLC, you would actually put in the entity, the corporate entity, which would be, in for this example, Joe's Bar Inc. Okay, and that's just how the entity is. Again, we have learned that corporations are people. So, that being said, that's how you'd complete that. Let me just check, because I think I might have had a question in here. Oh, no, I think we're good so far. Okay. Over on the right here, the stuff that you're going to need to fill out is the federal ID number or social security number. Now, especially if you have any work comp, it's an absolute requirement. Carriers won't even get you a quote on work comp if you don't have the federal ID number or social. So, in this case, I'm just going to throw something in there. The other thing that we need, because I did have work comp checked up here, the other thing too, just so you know, this, if you don't have work comp, this is actually an eligibility factor, so it won't affect the rate, but what can happen is if you leave this blank, we can get a quote back, and you can get quotes with your carriers, but what will happen is if all of a sudden then their credit turns out really bad, that carrier that provided the quote, when you send in the payment and everything, can then at that point decline coverage, and then it gets real messy. So I always, just like with my personal lines, I always try to get this up front, just to save me a lot of heartache down the road. Okay, business phone number. This is also required now, and the reason why is because a lot of carriers now are using that as the way that they track or look up the policy in their system. So if you don't have a phone number, they can't enter it into their system, and so that's obviously now required. Website's cool if you have it. If not, just leave that blank. And then that's pretty much all you need to fill out for this applicant information section here. If there's additional entities, like there's maybe Joe's Bar Inc. and Joe's Smithing Inc. or something like that, you'd obviously fill that out here. So, let's move on to the next page. I'm checking and I don't see any questions yet. Okay. Oh, it popped over my wrong screen. Okay. Next up is the contact information, and you always have to have someone down here. So let's just throw down contact type, general info or something like that, or owner, whatever you want to do. Contact name, Joe Smith. Don't really have to check any of these boxes, but you do have to put down an actual phone number, even if it's the same number as up top. Okay. Email address is cool, but it's not required, so again I'm going to leave that blank because I'm only interested in what the heck I need to actually get a quote. Okay. Now this next section down here is what I want to spend the majority of our time on, because this is where people tend to get pretty confused. Location number and building number is actually not too bad once you actually get the concept down. Basically, a location number is an address. Okay, so if you have like two addresses, one on one side of town, one on the other side of town, you're going to have two locations. But let's say you have two buildings at one address and one building at the other address. Well, it's actually not too bad if you just kind of think of it this way. Let's say that both of the building, like there's two buildings at location 1, so we have at location 1 we have one building, and at location 1 we have two buildings. Okay, so there's location 1 building 1, location 1 building 2. Again, location 1 is the address, and we're just saying how many buildings are at the address. Maybe there's like the bar, and then out back there's like a little storage shed where they keep excess booze or whatnot. That would be the building number 2. It doesn't have its own address, it's just a shed or whatever. Now, what you just got to remember is when you go to location 2, the building count starts over. So then at location 2, you have building 1. And it's as simple as that. You don't want to put building 3, otherwise it'll kind of start to screw things up when you get into the property section. So just remember that at each location, when you start over a new location, you start over a new building count. Okay? So let's go ahead and fill these in, and I'll do this really fast as I can. 123 Main Street. Whoops. We'll say it's in the booming metropolis of Bennett. You can fill out county if you want to, but it's not actually required. I've Nebraska 680. Okay, we're going to say it's inside city limits, and let's say that they own this location. Okay? Now, again, we're concerned with the location, actual location. So, or an actual building here on these sections. So, let's say at this building it is a bar. Okay? And let's say that the second building here is a storage shed. Okay? So, at the bar, there, let's say, are 3 full-time employees and 2 part-time employees. And let's say that the annual revenue here, let's just say it's $200,000. Like I said, Bennett, booming metropolis. Occupied area, let's say it is, let's say that there's 1,000 square feet that are occupied. The kitchen takes up like 100 square feet, so 900 square feet, whoa, that's actually pretty small. 700 square feet is to the public, and 300 square feet is, 1,000 square feet is the total building. So, sorry about that. Basically, occupied area by the owner for this particular business is 1,000 square feet, which is the total building area. So, in other words, the whole building is being occupied by this risk. There's 700 feet that are open to the public, and the rest is occupied only by the owner, like, for example, the kitchen, and the public can't go back there. Is any other area of this business being leased out to others? No, which is kind of like duh, because obviously the whole building area is being used. Okay? But you still have to answer that yes or no, or a lot of the carriers will come back and ask the obvious question. So, let's quickly do location 2. Again, it's the same address. Bennett, Nebraska. Okay. It's also inside city limits, obviously. It's the same address. We also own that shed. Now, there's no full-time employees working in the shed and no part-time employees working in the shed, and there's no actual revenue being generated by the shed. Okay? Occupied area, let's just say it is 200 square feet, 0 of it's open to the public, and the total building shed is 200 square feet. And we're not leasing out any part of the shed to any people or animals. So, that is no also. And then when we move to location number 2, it starts back over, 555 West Street. This is a whole new address now, because it's location 2. Okay, and now, this is also, let's say this is also a bar. Okay? It's also, let's say it's inside city limits, but let's just pretend that we rent this location. The owner rents this location. So he's a tenant here. He has 2 full-time employees, 1 part-time employee. He, let's just say, makes, $100,000 at this location. Okay, so again, at this bar on the west side of town, he makes $100,000. And let's say that, again, there is 900 square feet occupied, 600 square feet open to the public, but let's say that the total building area is 1,800 square feet. Now what that means is that he basically only, this must be like a strip mall where there's like two businesses in one building, but that's how you separate that out, okay? And that's how you tell the underwriter that it's a long building. Half of it's by our insured, the other half or whatever is by the other people. And then you go into more details on the property application if they own the building. Now, he's not leasing any of this out to others, so we're actually going to click no here. Okay? I've seen this answered both ways, and every carrier looks at it differently, but for the most part, you can just put no unless the owner's actually leasing it out or whatever. That's where they really want to see the flag. So, that's all there is to that. Let me check and see if I have any questions on this part here. Okay. Oh, great question about part-time and full-time. On full-time and part-time, they generally consider 30 hours or more as full-time. It used to be 35 hours, but now people are generally saying 30 or more. And that I would say I would go along with the 30 or more, and most underwriters would say if it's 30 or more hours, then it is full-time at that point. So that's actually a really good question on that. Let's see if there's any other questions. So far, no, but let me know if you have questions as we go. Just shoot me a quick email. I will open it up for questions at the end too, but feel free to email me as we go. That way I can try to answer these as we go. Nature of the business. Now in this case, it is kind of like a restaurant, I guess a bar. So just choose whatever's closest here. And then this right here, this box, is the most commonly missed box of all boxes on any Accord form. And it is the most important because it's one of the major eligibility questions. When did the business start? In other words, how long have they been in business as this entity or whatever? And that helps them determine, if they've been operating without insurance, or, how much experience they have. So if you take any notes from this whole webinar, make a big sticky note that says, don't forget date business started. I always have to bounce that one back because people always forget that, and it just is a huge time killer for the producer. So let's say the date business started was 1/1, and again, you might not know the actual date. You can kind of generalize or just put in the year if you want to. Let's say 1999. Okay. And then the description of the primary operations. This is also a very important box. If you were to just put down bar, you're going to probably get put to the very bottom of the stack with the carriers, because that's not very descriptive. They don't really know a lot about the bar. Is it a kind of bar where people get shot? Is it an Old West bar? Is it like a very nice, clean, upscale establishment? What work with us basically is what the underwriters at the carriers want you to do. So let's say, for example, this is a reputable bar that has been in the area for many years. The owner has a lot of experience, and I'm obviously not being very eloquent here, but you kind of get the point. Sell the risk here. Carriers have a lot of credits that they can apply to commercial lines accounts. In other words, when they plug it into their computer system, it might say premium $10,000. But if they're a senior underwriter, they can sometimes have up to 40% credit that they can apply. So that's the difference between $10,000 in premium or $6,000 in premium. The only way that they'll apply those credits is if they can see that there's a good reason. And carriers, underwriters are by nature, sorry if there's any former underwriters here, pessimists, I truly believe, because they have to rate for gray area. In other words, if you're trying to sell a body shop and you don't specify on the application that there aren't oil spots all over the floor and workers standing over them smoking, they will generally assume that that is the case. So, in the case of that, you would want to say, the floors are kept very clean, all rags are disposed in an OSHA-approved container, the customers aren't allowed back in the machine shop area, etc., etc. Here you can go in the same exact detail, but think like an underwriter or a company person or like a detective or like a salesperson. Paint the prettiest picture of this bar you can. Now, if there's anything negative that you have to say it, because you don't want them to find out about it later, or they can cancel the policy or jack up the premium on you. But what you do want to do is always offset every negative thing with a couple positive things. And again, this is just a tip to try to get the absolute best premium you can out of the quote. So anyway, that's how that works. So enough about that. But if you do have questions on it, let me know. This is your chance to sell the company person. Got to do that before you sell the customer. So anyway, that's all there is to that. And you don't really need to fill out this bottom thing in order to get a quote. So I'm going to skip it. Go on to the next page. Okay. Now this page 3, is just a bunch of yes/no questions and remarks at the bottom. So I'm just going to kind of fly through this. Usually the answer is no. Oops. Nope. No subsidiaries. Now, if you can answer yes here, you'll get bonus points and a lot of times a better rate. So there are some services that offer procedure manuals or actual, I guess, things you can purchase. OSHA, for example, has a website where you can go online and actually get approved safety manuals based on the industry. And so sometimes some agencies will actually offer those to their clients if they don't have one, so that way they can put down yes and get a better premium. It's also a nice service for clients, so I just want people to be a little bit more specific on that. Whoops. Okay, just gotta answer a quick question here. Okay. Alright. Let's keep working our way down here. Any exposures to flammables? No. Oops. Any insurance with this company? No. We'll say that this person hasn't had anything canceled. None of that with this person. No fraud. Oops. And again, this will be specific to your actual risk, and you'll just have to ask your people these questions because there's no way to know unless you ask them usually. Okay. No foreign operations. Okay. And that is pretty much it for that. So, if there is anything extra you want to put down, you can put it here, but I usually tell people to throw it into the remarks on that page with the description of operations, because I know that the underwriters are going to look at that on the last page. Sometimes they forget to look at this section here, so just a little tip there. And let's move on to the last page here. Okay. Now on the last page, this is another very important page. One of the things that is important is to specify which carrier it's currently with. So let's say it's with General Casualty or something like that. You'd want to specify that here. If you haven't had prior insurance, you would actually put down no prior insurance. But in this case, we'll say that they do. Okay. And then, if you can put down the premium, that's actually kind of good. It helps the current carrier know, like, if they can even touch it, if it's worth their time to quote. Here's an interesting thing that I don't think a lot of people sometimes realize, is that when an underwriter actually gets an application at the company level, they'll look at things, they'll look it over first, and if it's nicely typed up and it looks like everything's answered, they'll actually work on that one first because they know that they have the highest closing ratio. They're actually judged, their job is based on how many things that they close, obviously, and then what their profitability is. So if they know a lot about the risk, they know it's going to be probably profitable because they can rate it accordingly. And if it's all completed, they know they'll have a high closing ratio because they'll be able to get you a quote back quickly without going back and forth, and then probably not selling it because you probably won't get a quote by the time you actually need it. So the more thoroughly you can answer all these questions, the better chance you'll have at actually obviously getting a quote back in time, because the carriers will work on it first for you. The other thing that I'll note is I always want to include the current premium if I have it. And the reason why is because if a carrier doesn't know what the current premium is, they don't know whether or not they can beat it. Now, if you say, for example, let's say it's $5,000, okay, that's what the premium is. Now, if the carrier looks at this and they say, you know what, I can't touch $5,000, I'm not going to quote it. That's great for you. It's great for the company too, because they didn't waste their time, and they love you because they didn't have to waste their time. On the flip side, if they think they can beat it, they will get you a quote, and everyone's always afraid, well, then they're only going to do $4,500. Well, that's fine. If they give you a quote back for $4,500, you can always come back and say, look, I need it to be at $4,000 in order for me to sell it. And then they'll drop it down to $4,000. You can always negotiate after you get the quote back, but if you leave this box blank and they don't have an idea where it's at now and whether or not they can beat it, they'll move that down on the priority ladder. And the ones that they'll work on are the ones where they actually know the premium if they know they can beat it. So, just another little heads up there. Okay. Alright, let me move on down the loss history here. And actually, just a side note too, all these applications are actually industry standard, meaning that the Accord forms themselves, all the companies will take. Now there are some exceptions, like for example the builder's risk application is unique, so that would be not an Accord form. But almost all of the risks that you can possibly think of can be done on an Accord form. And if you're going to like AOR a policy, you would actually submit these forms in along with the AOR for commercial lines risks, because all commercial lines require these actually completed applications along with the Accord form. Okay, and I'm going to open it up for questions at the end there. I hope I answered that correctly, but if not, I'll clarify that. Loss history. The final thing I just wanted to talk about is loss history and how important this section is. Now, if there are no losses, you just check that box. Simple as that. The problem is, if you check that box, the company's going to get you a quote back based on no losses. And they won't actually pull a loss history until after the policy is issued. Problem with that is, if 3 months later they find out there was a loss, they'll just raise the premium. They don't care. And what will happen is your customer will get a bill and they'll call you grumpy because all of a sudden they're being charged $500 when they thought that their premium was a lot less. So I usually remind my customers that fact and let them know that, look, I can get you a quote back as if there's been no losses, but are you sure you haven't had any? And then sometimes they'll remember that they have or haven't had any losses. The other thing I use as a supplement, and I'll go over this at the end for those that have time, is I actually use a loss run request form, which is basically something that I have all my clients fill out when I very first meet with them that says, I authorize Josh or whatever to receive a copy of my loss history. And basically I fax that directly to the carrier. So that way I don't tip off the current agent by having my customer ask the agent for a copy of the loss history. This is in the instance where they've had losses and they can't remember what they are and that sort of thing. So there's a couple ways to go about this. One, if they haven't had losses, you simply check this box. If they have had losses, you can generalize, 1/1/2008, they thought that they had a loss, an auto claim, property damage, or something like that. And then, amount paid was like, $4,500. You might not know the exact amount, but I would always overshoot, and that way at least you know that your quote is going to be fairly accurate that way, because that's the most important thing. Now, and then of course, if the claim is still open, you do want to specify yes. In most cases, it'll hopefully be closed by the time they're trying to get another quote. And then if you want to put down the total losses, you just add these up. So it's pretty easy. I mean, this part of it, not too tricky. It's getting the losses that sometimes can be tricky, and I will follow up with that here. I just don't want to go over my time for those that were on a time crunch. Now, to answer a quick question that I had, you actually don't need to get the insured signature in order to get a quote. It's really only when you actually bind coverage that you need a quote, and or when you need a signature is when you actually bind the coverage. Another thing to note on that, along those lines, is there are some carriers that require a loss history in order to quote. Now, these aren't your general standard carriers, but sometimes when you get into specialty lines, or if you want to quote from every carrier under the sun, it's best to have a loss history. And the other thing that I have handy is I have this loss run request form that we use in our office that I generated when I was selling insurance, right here. Whoops. And basically, I can email this to anybody who's interested too. Oh, dang it, it's not attached. But I'll email this to you if you're interested. And what it does is it just says, I request a copy of my loss history be sent via fax to, and then I put my as a producer's fax number, and then again I look up on Google the claims fax number, and then I fax that into the carrier. And what that does is the claims people at the current carrier, let's say like in this example it's with General Casualty, General Casualty's claims people get the loss run request form, okay, and then they fax it to me, okay, and so then what happens is I receive a copy of the loss history a lot quicker without tipping off the existing agent if the customer would have had to ask their existing agent for this loss history. So it works really, really smoothly. There's only two carriers that I've had problems with as of today, which is State Farm and Columbia. Those two carriers are savvy to this little method, and I still have to go through the agent. But for most carriers, I can just fax that loss run request form and then have that be returned back to me, and it works out pretty well. So